In July 2025, something unexpected happened that shook the world of trade. 7 of the busiest ports around the world stopped accepting shipments from the United States. This wasn't because of war, natural disaster, or strike. It happened because of a tariff war that got out of control. Former President Donald Trump raised taxes, called tariffs, on Chinese imports so high that trade between countries began to break down. As a result, U.S. exports were blocked, factories shut down, prices at grocery stores rose quickly, and stock markets dropped fast. Economists warned that this could lead to the worst supply chain breakdown in modern history. Let's explore how. This problem began and how each major port both in the US and overseas is being affected. The Port of Los Angeles, the nation's biggest trade gateway, the Port of Los Angeles is the busiest container port in the United States. It handles about 1/3 of all goods that arrive in the country by sea. This port alone helps move goods worth nearly $500 billion each year. But in May 2025, Trump's administration raised tariffs on goods from China to a shocking 145%. That means a product that used to cost $100 to import would now cost $245. Because of this, the number of arriving ships dropped. Around 220 per 1,000 containers didn't show up. Work hours for dock workers were cut nearly in half. This meant thousands of workers, including people loading and unloading goods or driving trucks, lost income. Companies that relied on imported items like car parts or electronics had to turn to air freight, which is much more expensive. Even when tariffs were lowered to 30% during a 90-day truce, the port only saw a small recovery. Prices were still high and delays continued. The Port of Long Beach, next to Los Angeles, is the Port of Long Beach, which works closely with it. In 2024, the two ports together handled almost 10 million containers. But by May 2025, traffic at Long Beach dropped by about 30% compared to the previous year. Dozens of ship journeys were canceled. Experts said around 400,000 containers were lost between the two ports. Workers at the port and truck drivers began losing shifts. Companies like Amazon and Walmart paused many orders because of the high tariffs. Even after a temporary tariff, Long Beach didn't bounce back. The CEO of the port called May a historic downturn just after April had been a record-breaking month. This shows how quickly things can change when trade policies shift. The result: fewer goods coming in, more empty store shelves, and more delays in production lines. The Port of Oakland. The Port of Oakland, located in Northern California, is important for shipping American-made goods, like agricultural products such as fruits and vegetables and manufactured items, to other countries. But from April to June 2025, Oakland saw 39 canceled sailings, reducing the number of ships arriving. In June alone, traffic dropped by 10% compared to May, and by almost 13% compared to June 2024. Both imports and exports were down, especially agricultural goods that spoil easily. This is dangerous because these delays mean farmers can't sell their crops overseas in time. The port's director said this wasn't just a seasonal slowdown, it was a major shift in the market caused by trade tensions. Even ports that used to be seen as backup options are now struggling under the pressure. Seattle and Tacoma. The Northwest Seaport Alliance hit hard. The ports of Seattle and Tacoma, known together as the Northwest Seaport Alliance, have also suffered. In May 2025, cargo tonnage, the weight of goods, fell by 30% and by 40% in Seattle alone. This meant fewer ships, fewer trucks, and fewer jobs. Container ship visits dropped by 27% between April 1st to 15th compared to March. That's a big decline in a short time. Truck activity dropped by 16% year over year, leading to job losses in transportation and warehouses. One port official said this could be the beginning of a recession starting at the docks. When these ports slow down, the entire economy can suffer because they are the starting points for goods that travel across the country. Port of Savannah, a brief boom before the crash. Interestingly, The port of Savannah in Georgia had a different experience at first. Between March and May 2025, companies rushed to bring in goods before the tariffs increased. This is called front-loading. Savannah hit record numbers during that time, handling over 500,000 containers per month. But by June, the trend reversed. Traffic dropped by 9.6% compared to June 2024. This quick rise and fall show how uncertain things became. Retailers and auto companies in Georgia, Alabama experienced delays getting parts like engine modules and home appliances. And there were not enough chassis equipment used to transport containers, causing even more delays. This shows that even ports doing well can quickly be thrown into chaos when trade policies shift. Yantian Port in Shenzhen, China, a global choke point. While the US ports were dealing with fewer ships, Yantian Port in China, one of the world's busiest export ports, was facing the opposite issue. After the 90-day tariff truce in May, US companies scrambled to place new orders before tariffs went up again. Bookings from China to the US increased by 277% in just 1 week. This caused huge backups, ships were full, and prices for shipping jumped. Many companies couldn't get their goods on time. Shipping agents said they had no space for new cargo until late May. This caused companies to pay higher prices or shift to air freight again, increasing costs. The result was delays in everything from brake systems to electronics, making it harder for American businesses to keep shelves stocked and factories running. Port Newark Elizabeth, East Coast facing trouble too. Finally, on the East Coast, the port of Newark Elizabeth in New Jersey, serving the Northeast and Midwest, was also hit. In May 2025, imports dropped by 28.5% compared to the previous year. Companies rushed to bring in goods before tariffs increased. Trucking firms said their business dropped, and regular delivery routes became unprofitable. Financial experts warned this could raise prices by 4 to 6% for items like electronics and medicine. Even well-equipped ports like Newark Elizabeth became trouble zones because of sudden trade policy changes. Wider impact on the economy. These problems don't just affect ports, they affect everyone. When fewer ships come in, there are fewer goods available. This leads to higher prices, longer wait times, and shortages in stores. Items like auto parts, electronics, medical supplies, and groceries can all be delayed or become more expensive. People working at ports, in warehouses, in trucking, in factories may lose hours or even jobs. Why is this happening? All of this started because of tariffs. A tariff is a tax placed on goods coming from another country. The idea is to make foreign products more expensive, encouraging people to buy American-made products. Countries may respond by blocking American exports, which hurts US businesses. This back and forth is called a trade war. And just like real wars, trade wars can have long-lasting damage. Experts are now asking whether world leaders will step back and find solutions, or whether they will continue pushing forward into more uncertainty. What's clear is this: the choices made in government offices have real-life effects on everyday people, from the dock worker to the online shopper. This isn't just a shipping slowdown. It's the front line of a possible global economic meltdown, and it's already starting to hit your wallet, your job, and your daily life.